We're going to walk through a demonstration of disposal of plant assets. Let's take a look at the problem information. We have a cost of machine $30,000, date of sale July 1st, 2000 X9, accumulated depreciation at December 31st, 2008, $24,000. Depreciation method is straight line at 10% per year. Let's take a look at our first step. We need to determine the depreciation to the date of sale. This is the time period from the end of the year to the date of sale, from January 1st, 2000 X9 to July 1st, 2000 X9. Let's first take a look at what the annual depreciation would be. That would be the cost of our machine, $30,000, times the straight line rate of 10%, $3,000 annually. The time period between December 31st and July 1st, or January 1st and July 1st, is 6 months, half a year. Therefore, we will take the annual depreciation rate of $3,000 and multiply it by half a year, so our depreciation for this time period is $1,500. The next step is to do a journal entry. The journal entry we need to create will account for the added depreciation for this machine. So we are going to make a debit to depreciation expense for the machine for $1,500, and we're going to make a credit to accumulated depreciation on the machine for $1,500. I'd like to take a moment and look at the T account for this accumulated depreciation account. The problem told us that we had $24,000 on December 31st. We are adding to this at this point $1,500. So our accumulated depreciation account now has a balance of $25,500. We're going to need this information to complete our journal entry when we dispose of the plant asset. We're going to look at step 3, a case A. The machine is sold for $5,000. The following information we already have: cost of machine $30,000, accumulated depreciation from the machine $25,500. What we need to do is we need to determine the book value, because we're going to be looking at the book value minus the sales price to determine if this machine is sold for a gain or a loss. Well, what is book value? Well, book value is equal to the cost, or the machine asset account, minus the accumulated depreciation account. So in this case, we have a $30,000 machine minus the $25,500, and we have a book value of $4,500 or $4,500. Now we need to look at doing a journal entry. The first thing I'm going to start with a journal entry is, what am I getting? Well, I am getting $5,000 in cash. So I'm going to write that down. I know that. What's the next thing I need to do? Well, I need to remove the machine and its accompanying accumulated depreciation account off its books. Accumulated depreciation has a normal credit balance. Therefore, to remove it off the books, I'm going to debit accumulated depreciation for the machine for its balance of $25,500. The next item I know is that I have the machine, and it's on our books at $30,000. It's an asset, so it's a debit balance. So I am going to need to credit that. So I have a credit to the machine for $30,000. Notice I left a space. Well, debits must equal credits, correct? Debits always have to equal credits. And if we look at our debit side, we have $30,500, and on our credit side we have $30,000. We're missing $500. Guess what that is? That is our plug figure for gain on sale of machine. You can check this by saying book value of $4,500 minus the sale price, which was $5,000, is $500. In this case, it's a gain. When we speak of gains and losses, gains are credits, losses are debits. Let's take a look at a case B. The machine sold for $3,750. We're still looking at book value minus sales price to determine our gain or loss. We've already determined our book value to be equal to $4,500. So let's begin with our journal entry. We'll begin with debiting cash for the amount we received for the machine, $3,750. Next, just as last demonstration on case A, we're going to remove the accumulated depreciation account off of our books by debiting the account for $25,500. And we're going to credit the machine for $30,000. Now this time you can see that our debits don't equal credits again, but where does our gain or loss need to be? Is it a debit or a credit? Well, if we add up our two debits, the cash and the accumulated depreciation, we have $29,250. That is less than the credit side of $30,000. Therefore, we're going to have to put a debit into this journal entry to make our debits equal credits. I'm adding a debit, loss on sale of machine, $750, so that our debits equal credits.